Hey, this is Stephen here from Share Navigator, and it's your stock market update on May the 8th. So I'm going to just start off today with Disney. They had their earnings yesterday. So you might recall some time ago when Disney rose here, we took it out of our buy. We actually put it into our sell recommendation. And now it's after selling off. It dropped 10% yesterday after earnings. So it wasn't necessarily the fact that earnings were bad or anything. There was a slight miss on revenue. They actually beat on the earnings side on the bottom line. But just a couple of things to note, and I think that's why I wanted to focus on it. Between themselves and Universal Studios, so Comcast, who own Universal Studios, both are kind of putting in a huge spend over the next 5 to 6 years in their theme parks. So Disney are going to spend, I think, up to 60 billion upgrading existing theme parks, primarily focused in the one in California initially, and then I think there's about 19 billion allocated to upgrading Orlando. So there's a big spend going on there, and Universal have already spent big. And here's where the issue is for Disney, just on the theme park side of their business, that Universal's is set to open. Their new park is set to open next year in Florida. So they reckon that could take actually a bit of traffic away from some of the Disney theme parks in Orlando and Florida. So it's important for you to know that this is where what the market is kind of reading into. On a real positive note, they actually became operating cash flow positive on the Disney Plus, on their streaming side of things, and they reckon they'll be fully profitable by the end of the year there. So that's going to be a bonus. So my best guess on Disney in the short term, it could be actually under a bit of pressure, but I would certainly watch this space, and if it actually did retreat maybe back to the 200-day moving average, it might be worth picking up then at those levels. But I would hold off for now, just in case people ask me, and the reason being primarily because their biggest competitor in Orlando in the theme park space is going to have a new park on stream next year, and Disney are going to be in the middle of builds, and that could certainly take a bit of traffic away from the Disney theme parks. And the results from the theme park division, by the way, have been excellent. Their average spend per customer is up, average ticket prices are up, and volumes of people walking through the gates are up as well. So all the metrics there have been really, really good, and especially the ones in Asia. But just in the short term, the one in Orlando might be actually under pressure next year, and that could be an issue for earnings. How much will Disney Plus offset that? That's the big question. So there might be a kind of, let's say, a white knight there in the background, but I think short term, it's hard to see how the market gets too excited about Disney, and maybe it just grinds its way down lower. I think if it gets below $100, it might be worth a look again. So I just said I'd lead off with Disney there. Just onto the S&P 500. As I said yesterday, it's kind of stalled here now again above this 50-day moving average. We said we were talking about our short futures position and that we might initiate this bull call spread that's financed by a short put. And I said I'm going to wait a few days to see what the action is. So I'm going to hold off just for now, just to see how this transpires. It was up 0.1% yesterday, which is nothing. And I just want to see how it transpires over the next day or two. So still not ready to do anything just on the S&P yet. You can see the short-term RSI is in the oversold. The 14-day RSI is kind of just petered out a small bit here. And the futures are showing kind of slightly up, but nothing major here. So still no change for the S&P 500. My view is that maybe this low gets tested. I wouldn't be as confident it will get taken out, and possibly even just here, really in and around that 5,000 mark. So we'll have to just wait and see how low it goes if it does decide to take a retest here. Just looking at some of the Mag 6, for example, we had Nvidia give away some of their gains yesterday. Google was up, or Alphabet was up, Microsoft was down. And Apple was up a small bit there, so it was a bit of a mixed picture there from Nvidia, from the Mag 6 there. And then again, just in terms of our active trader watch list, there's nothing in our that we're ready to trade just yet in there. But Disney might show up in here tomorrow. So what I said was you will get short-term rallies in Disney, and it might be one you could trade short-term. But my best guess is it's going to grind its way down. So if that does show up in there, it doesn't mean we'll necessarily trade it. So just be aware of that. Moving on to just bond yields and FX, because the bonds are going to have a huge impact on the markets, as we said. So yesterday it kind of ground down the yield. It went as low there as 4.42%. It's back up at 4.46, 4.47%. So it'll be interesting to see now that we actually make an attempt at this again. But certainly the jobs data last Friday, the market is kind of focused in on. Next week is a big week for inflation data. So my best guess is on the 10-year, this probably marks time around here. Probably doesn't do a hell of a lot for the next week or so until we get that inflation data out, and then we'll either make an attack here again or we'll go lower depending on what way the inflation reading comes in. So next week could be a big week for the 10-year yield, and it could be a big week for the stock market, because if that inflation data comes in better than expected, we might just get a resumption of the rally. And then on the flip side, if it comes in worse than expected, we might see the 10-year go up to 4.7% again and actually see stocks come back down. And you can see here, just again, the euro dollar is something similar here. It's marking time, got up to both moving averages here, failed to break through them really, and it's backed off a little bit here. So you would expect some of that to happen here. There's nothing, it's not a downtrend or anything like that, but it's just a bit of weakness there as it's bumped off resistance here. So again, you could probably expect the euro dollar, or the dollar at least, to mark time until that inflation data comes out next week. So it's going to be very, very important. Moving on to our natural gas. So as you can see, natural gas continues to grind up here against this resistance area we spoke about. So our UNG and NGASP positions, depending on which one you're in, are going well now. They're all profitable, and I think they're going to get more profitable. We may give up some gains here, guys. If you look at this short-term RSI, it's kind of really overbought at this moment. And if you look here again, the more longer-term RSI is getting to overbought. It doesn't mean it can't stay up there for some time. So just don't be surprised if you see this pull back a bit before it has another go. But certainly the trend is moving in the right direction. And we're pushing up here against this resistance point. So if we break through here, guys, I think the 200-day moving average is next on the cards at 248. And then after that, we could go as high as 3. And then probably at 3, that's where I get off this train here and take that profit off the table. And we would have made a substantial profit on that particular trade then at that stage. But right now, my best guess short term, we might give up some of these gains. Just looking at UNG, you can see the breakout here as well of the 50-day moving average. The next real area of resistance for this is 1782. So there's quite a bit of a run there, nearly 10% run on this one before it hits next resistance here as well. So yeah, I would simply hold my natural gas positions, but I think short term maybe expect a pullback. Not guaranteed, of course, but that's our best guess at the moment. And crude oil, interestingly enough, is making its resurgence of that low here again. So, the gains in crude oil, this is good for inflation, not good for energy stocks, of course, but very good for inflation. And certainly the central banks will be delighted to see this. So as the tensions in the Middle East subside, the price of crude oil is going down. But we're extremely oversold now here on the short-term RSI. And this might be something we do look to trade. If there is a bit of a crossover here. So we're going to keep an eye on this one because we're getting our longer term RSI down below 30 here as well. So usually when that happens, we get a bit of a bounce in oil. So it will be something we will monitor closely. So there might be a trade in crude oils soon, and we'll be looking maybe to trade that. Then finally on to the metals. Like this story isn't changing. This is just, I'd sell into any strength here on copper and silver. Take that profit off the table and just hold your gold. If you own gold, just hold it. And it's as simple as that. So really, just in summary, just on the indices, we're still waiting. So we're not going to do anything. We would not buy the S&P 500 now. So I just want to be clear on that. We're not a fan of buying stocks at this moment in time. We would much rather have seen this pull back to the 200-day moving average, and then we would have been, more heavily invested in equities if we did get that retracement back here. It's still not out of the question yet, and I think a lot will depend on the inflation data next week. So potentially you could just actually see the market meander sideways along with the bond yields, maybe for the next week until we get the inflation data out next week. So depending on what happens here, guys, I will certainly, before the inflation data comes out, put in protection on the short futures position. Because the last thing you want to do is, inflation data comes in much better than expected. We get a spike in the market and we're holding short futures. So we'll certainly have protection in before the inflation data comes out. But I just want to see that we actually meander back down below the 50-day moving average first. And if we do, we'd be putting on, we might even get out of the short futures, or we might be able to put on that finance bull call spread a lot cheaper. So that's the plan of action on the S&P 500 short futures. If you have any questions at all, please don't hesitate to book a web meeting with me. Okay, this is Stephen from Share Navigator with a stock market update. Thanks and bye for now.